You're watching the Blockchain Interviews, hosted by Dan Weiskopf. Each episode features interviews with leading industry experts so that viewers can have a deeper understanding of today's quickly evolving blockchain marketplace.
Good afternoon today, Mason Jappa. Thanks for doing the show. I really am excited to do it. And, honestly, sometimes it's even more fun to talk to a private company than a public company. And you've had great success in growing Blockware Solutions. Because as a private company, you can offer up different insights than sometimes a public company can be on. So today's July 8th, in case anybody's wondering, or July 7th, actually. And we have Mason Jappa on the call. Thanks very much, Jason. Appreciate the time.
No, thanks for having me on, Dan, and excited to talk about, a wide range of topics. Agree with you that private companies, aren't inhibited by sharing X or Y information, and have a lot more, strict confidentialities and PR teams and, IR relations and people that do that stuff for them. Here it's a private co. So it's exciting to be able to share information, to the group and to your followers and to add some insights from a different perspective, right? So
Yeah. So our listeners are mostly financial advisors, and frankly, Mason, you're very well known in the industry, but some of the folks in the audience probably don't know you. So talk to us a little bit about your journey and how you got here.
yeah, no, I think it's a great journey. So for myself, grew up in the Midwest, uh, humble backgrounds and beginnings. My grandfather started a wood manufacturing company that my dad still runs today. Um, Ended up going to Indiana University, got a finance degree, almost went into investment banking. So I would have become one of your listeners. But actually, I found Bitcoin the year I was graduating in 2013, and I was fascinated. So at the time, I had job offers or an offer of a direct admit to get a master's degree in information systems. So I pursued a master's degree in information systems, um, did management consulting, but I always had Bitcoin on my mind. So with that, and on the Bitcoin side, I was really interested in the mining and the infrastructure. What powers the network? How the network works, and how are these transactions processing? How is this decentralized? And that led me down the Bitcoin mining rabbit hole. So actually leveraging some of the resources I had, a wood manufacturing warehouse, I started building a mine in 2015, um, and sourcing cryptocurrency miners and learning just from myself from scratch what that takes, use my own capital that I had saved up, from birth, um, whether it was lifeguarding or feel like I always had a job growing up, but slowly scaling. And I remember my dad, saw like the first energy bill. He was like, his like jaw dropped. But luckily, I was making a profit, so I scaled that. But then I launched Blockware in 2017, and a lot of that was from the findings of what I saw in Bitcoin in the network. And I saw the United States in 2017 was only 0.4% of global hash rate, and Bitcoin adoption was not prevalent here. And so a lot of education and transparency was needed. But along that process, something that I launched a part of the business, and a quick solution that I could solve was sourcing and selling the machines. In the past, Bitmain was probably the largest manufacturer, and you would just send them Bitcoin or Bitcoin Cash or cryptocurrency and hope your machines showed up 3 months later. So I was like, well, in order to attract US buyers, we need to have contracts and guarantees and really, formalize this. So I was able to work it out over the years. and just, I launched at a good time, right before the 2017 boom. And my first ads were, putting a Craigslist ad in the top three cities of every state. A lot of interesting calls, but scaled from there. And still to this day, we are one of the largest distributors or market makers of machines. But we've had quite the journey and things accomplished since. And for me, I think, reeling back, like, entrepreneurship was, always in my blood and something I wanted to do. After I did mention this whole thing, I was a software sales engineer. So, I, done the corporate life and was like, I want to start my own company, and Bitcoin was, the thing that I was obsessed with since I discovered it.
So, two things I want to ask you. First question is, definitely walk through the importance and the meaning of hash, because frankly, some of the folks may not be, fully aware of what that means. And for our discussion, it's critical to know that.
Yeah, no, and that's a term that's thrown around a lot, right? So hash is the backbone and the infrastructure of Bitcoin. Without computational power pointed towards mining Bitcoin, Bitcoin does not exist, right? So when Mason wants to send Dan 1 Bitcoin, a miner is the one that processes that transaction and puts it on the blockchain ledger. So miners are the computational power element of Bitcoin, and they're powering the decentralized transactions. If you took away the computational power, aka the miners, then you can't transact, and Bitcoin would be non-existent, right? So that is what Hashrate is, and it's like a space race now with all the pubcos and everyone, trying to grow as much hash rate as possible. But as Bitcoin adoption grows, hash rate needs to follow, and that way that we can have speedy transactions, and that way we can continue to have like a decentralized network, right? So hash rate in its element is, think of it like computational power, right? Like in your car, or if powering your cell phone, like that uses computational power. It's the same thing for Bitcoin. Without that computational power, your phone doesn't work.
And that's along with making the system faster, right, or more efficient, right? It also makes it more secure, right? And that's critical. Off the top of your head, do you remember what it was in 2015 when you first started?
Oh, the price of Bitcoin probably on
No,
the
hash, the hash rate.
hash rate. Oh man, it was. I mean, probably in the like 20 like X hash range or sub like that. Like a lot of like Laszlo, actually, the famous pizza transaction. Like
Yeah.
he was one of the first ones that made it so that you could mine Bitcoin with GPUs. But before that, it was all computational power. So it was very minimal. And now we have, high powered purpose built ASICs. But yeah, so like back in the day, like the amount of computational power back then could not process, the trillions of dollars or billions of dollars of settlement transactions that take place.
And this is part of the reason why the industry is so capital intensive, right? It was constantly going through an upgrade cycle. And that's at the end of the day, core to your business. Before we go to the next set of questions, also wanted to reestablish your company in terms of how many people you have employed, because there might be a presumption that, well, it's just Mason, and it's not.
Yeah, it feels like that, right? So yeah, I mean, we bootstrapped our business, and really was like a base of three co-founders. Unfortunately, one of my co-founders passed away of leukemia when he was 29 in 2020. So then there was two of us. Yeah, sad story, but we kept on. So there's a legacy and a further meaning to the business to me. But from 2021 to now, we scaled it to 30 individuals. We operate our own data centers. So it's not just Mason here. We've got 30 employees, which I'm proud of, and hand selected, and they work really hard. And yeah, like I think like the business that we do like benefits the network, and we put out a lot of really good material and education, and work with most people in the industry, which is why you say I might be well known, to evangelize the network and make sure that the path forward can exist, and Bitcoin can become what we all think it will be.
And how do you organize your different divisions, your different I don't know if it's fair to say subsidiaries, but units, because you're you've got your own ecosystem, right? And I want to like explore how you keep the culture what it is, you find the synergies, and you keep expanding at the same time.
Yeah, no, it's a great question. So I think keeping like a good core and a good mutual vision and alignment is very important, and a good culture. We all work remotely except for my data centers in Kentucky, where I have 10 employees. So we actually have weekly staff meetings, and keep everyone involved. We have monthly kind of fun happy hours, and then we try to have full scale meetings, once or twice a year. But my divisions are sales. I have a research and analytics arm, so that's division 2. I have finance and accounting, FP&A 3, operations 4, and then software, which is what I view as my future, and my most exciting product is 5. So I think those are the core businesses, and within operations is data center operations. So it's 5 core businesses with individuals sitting in each. But all of us, like it's just we've been around for 6 years. Still feels like a startup. Everyone wears many hats, and I like that culture. And I think that's versus a pubco. And I've worked in corporate. Like if you're in sales, like you're in sales, or you're in finance. You're in finance. You don't get as much exposure of what it's like to be in sales, or what it's like to be somebody in the data center.
Yeah, well, when you're part of a small company, I think everybody's effectively in sales. By the way,
Yeah.
If you don't have sales and you're a small company, well, you only have expenses, and that's not really a good business. So anyway, so you started touching on your vision for the industry. Walk us through your vision for the industry and how that aligns with your business.
Yeah. So my vision for the industry, like from the start, was to decentralize Bitcoin. In 2017, like over 90% of Bitcoin and mining was in China. So like decentralizing network was core to the ethos and thesis. So that continues and needs to happen. But like the 2 biggest problems that I saw and that I'm solving with my software is, one, liquidity on the mining rigs themselves. So that's the ASICs, which are just basically machines purpose built to mine Bitcoin or servers. It's very tough to sell them or have the ability to resell them. They're attached to hosting contracts, right? Some are repurposed for creative use cases. And the problem number 2 is it being attached to that hosting contract, right? So if you want to sell that ASIC, you'd need someone to take over the hosting contract or energy contract, or data center contract, right? That's tied to that. So I created a software built on Bitcoin and Lightning that commoditizes machines, and it can plug into any data center, and it's selling only live and hashed machines, the physical machines. And as soon as the payments processed by Bitcoin or Lightning, the revenue of the machine that it generates via Bitcoin is pointed towards the buyer. And via smart contract in Bitcoin, the fiat or the payment, not the fiat, the Bitcoin payment is transacted. So as well, we collect the hosting fees there, right? And then what happens is with the third-party hosting side, because I want this installed in data centers that I believe are quality, because some aren't, right? And some don't hit your SLA parameters, and we're very careful who we work with.
Yeah.
we will end up inheriting the contracts and bill the clients. So the host will only have one client in this system. It's Blockware when one of their machines sells. And then we bring on all the demand through our marketplace. And why that fits my vision is that I think people need to have liquidity on these assets. And we saw that in the past, and we saw a lot of battles in the past. Like if you need money quickly, if during a bear market, you need to be able to sell. If you want to take profits, if a machine appreciates in value, right? Machines are positively correlated to the price of Bitcoin. Like for example, in June 2020, when the S19 was released, it was $1,800. In November of 2021, in the secondary market, it was selling for $15,000 with the bull market. But people couldn't exit that trade because they were tied to these hosting contracts. So I just want to provide a service to the people that allows them to have liquidity. And also what I'm doing, because I built this on Bitcoin and Lightning, is creating transaction fees. So in the year of 2036, in the future state of 3 halvings, 99% of Bitcoin subsidy will be mined. And then through the year of 2140, we're going to be chasing that last 1% of Bitcoin subsidy. So during those years, and what all miners will rely on in those years is transaction fees and the value of Bitcoin being high enough for those transaction fees that's profitable for them. So we need to create use cases like this that create transaction fees, and I'm fixing other problems.
Yeah, I've had a lot of conversations with folks about what's going to happen in 21, 30, et cetera, right? 40, whatever.
Yeah.
Few people I know have thought that far out as you have. So I commend you for that. And some of the answers I've gotten is, I'm not going to be around, But when I'm thinking about this, talk to me a little bit more about the hash, right? And how you could create the hash rate. You could create, I think what you're saying was like a liquid market, because that's very intriguing to me in a lot of levels. Because when you look at a miner, they've got the energy costs, they can perhaps hedge that. They can perhaps hedge out the price of Bitcoin, right? But you're talking about the equipment here, which is a huge issue for some folks, right? Because it's locking up capital. But you're talking about an ability to manage that key cost. How exactly how are you saying you're going to do that? Because that's pretty cool, actually.
Yeah, so I create a marketplace, and actually it's decentralized. So the seller can set the price, and I've got over like thousands of machines already listed. This was launched 2.5 months ago.
Yeah.
And buyers, when they come in and with the click of a button, paying over Bitcoin network, choose to buy that machine. So it actually allows you to trade your machine with the hosting contract. So we collect those fees through the software. So it's just like with Bitcoin, how it like spot trades. Let's say it's at 30,000. I haven't checked my phone. There currently doesn't exist any type of medium or exchange where the price of the machine. And this could be that. And eventually, like in a perfect market, as this evolves, like we will know the price of those machines, right? But right now, like, the pubcos rely on brokers or et cetera, to do their large scale, buys and sells, or work with manufacturer. But on the sell side, they work with, brokers specifically. This just creates a decentralized system where the price is dictated by the seller. And if the buyer is rationalized by the price, then they buy. It's a free market. And just like Bitcoin network, I make money via transaction fee, which is, fair for me building the service, just like you're using, any exchange medium.
Should I be looking at this as the same way as somebody could create a market for used cars?
In theory, but it's not, I wouldn't put it in the same facet, because you could, like, if the car was there and it was And as soon as you
Right.
click buy,
Yeah.
and it's traded, and if it's transferred to you, then yes. But the thing that's different here is like these are live hashing servers. You can actually go backwards and see how it's performed, not by using like, Keller Blue Book and Carfax and like checking if it's been accidents, all that stuff. You can see its performance and then make an educated decision. And as soon as you buy, the revenue is immediately pointed to you. And then you
Okay.
could actually even relist it immediately afterwards. Some people do. So I've already had people like multiply transact a single rig and it doesn't move, right? We're only after machines that are live and hashing incredible facilities.
And how closely does it track other people's pricing indexes? 'Cause
We have
yeah,
so the pricing on our marketplace is set by the sellers.
right.
So the machines that are priced well will sell better. And then the other element is the energy cost. Like the lower cost energy hosting rate machines will sell faster. Um, it's a free market. So if you want to sell faster, you can price at market or below, it'll probably
Pricing.
sell.
Interesting. Yeah. And I asked because, well, I'm in the ETF industry, right? It sounds
Yeah.
like there could be a mechanism around this, um, for an ETF if the marketplace was deep enough, um, uh, and efficient enough, right? So we're still at the early stage, but as you scale up, for sure, I could see a lot of value for the institutional or industry type of player. But right now, it's mostly smaller types of players. Is that fair to say?
I think it's a mix. Like 70% of the money is institutional, but like there's more retail. And you could buy an individual machine with the platform, right?
Yeah.
So that gives that person a chance. But I think it'll evolve, and as we onboard, like pubcos and larger entities, it'll become more institutional, and you can buy batches of 1,000 rigs versus one, or 100, or 500, right?
Been surprised. I'd be interested in knowing your view on this. In the fact that Bitcoin has rallied as much as it has, but the equipment hasn't followed, right? I don't know where it is currently, but I'm sure you do in terms of off the bottom.
Yeah, I think like machine prices bottomed probably about 2 weeks ago. That was before like the ETF run. We
Yeah,
saw some recovery, but I do see a good entry point on machines, and a lot of people are nervous about like the upcoming halving,
sure.
and the new machines and the efficiency of those machines like haven't vastly improved. So I'd say it's a buyer's market right now, but it's a good entry point. Um, I always embrace the halvings and have different views on that than others. Um, they'll create supply shock, and it'll create more, it'll push out the non-efficient players, right? And it'll make, as these transaction fees use cases arise, it balances out. And but like usually what you see is like a Bitcoin price rise, which leads to more overall fiat revenue for the machines, right?
Yeah. So um, usually,
Sorry, cut out the thing.
usually, usually the price rallies in advance, right? Um, and then continues after the halving, right? So some of what we're seeing right now, I think, has been predicted through historical trends. So I'm not going to ask you to make any predictions on where you see Bitcoin. It's not your business to make that prediction. So um, unless you want to, of course. But it,
Yeah. I mean, statistically speaking, the year after the halving is Bitcoin's best performance year. And usually we see compute or hash rate drop leading up to halving and after the halving, and then recover. And And I think as subsidy continues to lower, you'll probably see more consolidation. But the factor like that changes everything is Bitcoin price. Like everyone's models have always been broken um, because of X or Y or Z. So it's like it's always fun to talk about this because everyone has different perspectives. Um, and ultimately, what moves Bitcoin's price is net inflow and outflow, right? And then you,
Yeah, but there's also we've seen a bump up in transactional revenues May, June versus the past because of ordinals, et cetera. I found that to be very encouraging, and yet that hasn't led to a spike up in equipment prices, unless, of course, as you said, it is the case they bottom, right?
yeah, no, it hasn't. I mean, there's just still a lot of supply. Like right now, the supply of equipment outpaces demand. So the sellers are still trying to sell, and they're even based. There's still people from last year that you know took on bad debt, et cetera, that are still like selling for discounted prices, right?
It's funny because right now when I'm looking at the marketplace for, it doesn't surprise me that miners have rallied as much as they have in terms of the public markets, because, well, energy price is more reasonable than it once was. It's a perfect storm last year, right? Bitcoin price is up 100%, and capital access is more available. I mean, I think Hashrate just borrowed money from Coinbase at a relatively reasonable price. So, it would seem to me that maybe your business for equipment is about to really take off. Have you seen
Yeah,
increased demand too?
yeah. I mean, June was our best sales month uh, of the year. Yeah, like we move with markets. We're in a position of, like of being the service provider, right? So like a lot of companies come to us for information, and we put out really, we have a newsletter and put out really good research for free. Feel free to subscribe, but like we're a good indicator of the market. When we're doing more business, the market's improving, right? So exactly right. I think June and July are going to do well, and uh, having credit like stripped from this industry, as a result of last year, and having it come back when credit comes back, then you'll see a lot more demand for miners and expansion and hosting and ultimately drive network adoption and the ability for miners to accumulate and hodl their Bitcoin instead of sell. As subsidy decreases, miners sell pressure will decrease, aka the amount they have to sell to cover their expenses. Because if they can get credit facilities, where they're aside from them being after like growing their hash rate, ultimately they want to grow their Bitcoin holdings.
Yeah. So just to be clear, you've got somewhat of a retail business, and then you also have institutional business. And some of them, you know, work together and, in buying and selling some of the equipment. What are can you name any of the public miners that you do business with?
I can't name, but I'd say like 80% do business with us. The majority, I served on the advisory board for Riot for 2 years, public information. They'll come to us to buy or sell machines. Um, we're we have a really good foothold in positioning the secondary market. Like with manufacturers, like you want to make a purchase, like they're delivering, 3-6 months in advance. Like we can sell you like spot stock of machines like right now. So that's like a good carved niche for us.
But if I buy a piece of equipment from you, well, let's say I buy 1,000 units, right? It's plugged in, you're saying, but it doesn't have to be plugged in. I can move that piece of equipment to my location as well. That's my
Yeah.
option.
Yeah. I mean, so there's one of our arms of business is like OTC hardware sales, right? Where we are shipping from seller to buyer or from manufacturer to buyer. And that is not a plugged-in machine. Our software is only for live and hashing machines in data centers where we're transferring the hosting contracts. And that's new. So historically, a lot of our revenue and a lot of our growth is in that hardware side where it's moving from seller A to buyer B.
So you got into the business relatively early, congratulations.
No, thank you. Yeah.
You've got a vision for the mining industry today. However you wanted to define it, how big do you think it'll be in years to come?
Yeah, I mean, like a lot of my models, I think of like a Bitcoin 10x and Hashrate 10x over the next 10 years. So that would put us at 300K and network hash rate, at three in the above exahash range, like the 3000 exahash, right? So that's what where I think, but usually I'm very conservative with my models and what I tell people. But I think that's certainly feasible with, especially like with an ETF and especially with macro, and especially with just looking at the order pipeline of these pubcos, we track every order that's placed from manufacturers, and then we can have a good foothold on network hash rate. And in order for that to be profitable, we need Bitcoin at this levels, and there's lots of layers of products being built on Bitcoin that'll drive transaction fees. So there's so many things that play into your predictions, but usually I'm at like a 10x and a 10x over the next 10 years and having them be equivalent. Some people, have their different views and perspectives.
But can you offer up some definition in the context of either revenues by the industry or people or something that is frankly a little bit more relatable?
Yeah, no, tangibility. So for revenues, as you saw with the spike of ordinals, I think we'll see more. I think we'll see transaction fee revenue continue to grow, and especially with subsidy being 99% mined in 2036, we're going to need those growth levels. And something you should track also is user adoption, and every single day that ticks up, and then also tracking the amount of transactions that are settled, right? And each one of those will drive revenue. So looking at miner revenue, and it's very correlated to the price of Bitcoin, the subsidy, and then the transaction fees. Those are three things that generate revenue. So if you can, the golden ticket and the magical answer is predicting those three things correctly, right? I am for everyone that's not that having, we are releasing a halving report that is putting our best bet at future analysis, and we do all these model simulations. But I think historically, I think transaction fees could and will start to climb to being 10-20% of revenue during the 2020s. Right now they're at 3%. And we saw the ordinal spike right in May, and now it's tapering. It should pick back. It'll pick back up, right? But there'll be another ordinal. There'll be another. Lightning Network still needs more adoption, right? That drives. That's a payment layer that drives transaction fees. And then as far as revenue tied to miners, that's directly just tied to the subsidy and your share of the subsidy, and then in fiat, the Bitcoin price that on a daily basis. So without I don't like to give Bitcoin price predictions. I told you my 10-year outlook, but
yeah,
I would say I'm generally bullish entering the halving. About 80% of Bitcoin hasn't moved for about a year. So there's a lot of long-term holders. So that leaves 20% of circulating supply. And a lot of the fresh supply that comes out is generated by miners. So taking that into account, a lot of people talk about, and Bitcoin experts, supply shock, but this is also the same of other types of commodities, right? When supply goes down and and there's a finite amount, that's what's so amazing about Bitcoin. It should drive up price. So I do think overall, the miner rally hasn't justified. And I think like a lot of that was like the cleanse of them getting out of their debt and repositioning and the market repricing in. But I do, have a general bullish outlook for, the public miners, on the go forward basis, even after the rally. And I do think, revenues and transaction fees and Bitcoin price will do fairly well. Um, as soon as you get more nation state adoption and like all these other elements, uh, there's micro and macro news, but like micro news moves Bitcoin. It's kind of amazing.
It's funny you say that moves Bitcoin, but yet everybody's always asking me, well, how is it correlated to inflation? Or, wait, why is it considered a stable value, type of instrument, right? And those are macro questions, really.
Yeah, and I mean, like Stanley Druckenmiller will, and you saw Larry Fink on recent, like he'll say it's a hedge against inflation, right? It's the same gold heads, right? But I mean, gold's just, some of the silver people, like it's just they're the same. I'm nothing against it, but it could be a hedge. Like if the U.S. dollar is going down in value because of inflationary and printing supply, and Bitcoin is net neutral or goes up, then that certainly is a hedge. And if you look, one of the best charts to answer your question is look at Bitcoin US dollar. Like the US dollar just gets absolutely cannibalized by the day.
Cannibalized or goes down in value?
Yeah, I mean, it goes down in value. Like
yeah.
Like it's just it's a straight downward chart.
Yeah, no, I totally follow you on that. Yeah. So you see the mining industry expanding in the context of size and scope. You see that Bitcoin utility value is going to be increasing. I personally think here in the U.S. we may have that same view, but I think what's often lost is the fact that in the emerging markets or other international markets, it actually has far greater value. You must see that in your buying, in your demand for your services.
100%. Yeah, I mean, like, look what happened to the Turkish lira. Like, you see a lot of onboarding of like people onto Bitcoin, but also mining, which I view as an energy arbitrage. Right, it's the best way to dollar cost average into Bitcoin. Anytime you see like a country or a sovereign state that has a currency that's not doing well, you see onboarding onto Bitcoin and Bitcoin miners, and then we've actually seen like a huge spike in UAE adoption of Bitcoin mining. Like Marathon's deploying a lot there, and we see a lot of like requests to deploy there because I mean they have a lot of capital, right? And that's the oil capital. And mining is a good, they need to deploy it, and mining is a great place to deploy. Russia's mining. China is still at like 18% global hash. It's pretty fascinating.
Oh dear. Yeah. So do you have insights on, where the hash rate is?
Yeah. I mean, I would say the United States is 60 to 65%. China, roughly 18%. I would say Russia is probably in the 5% range. So it takes us up to roughly 90. And then, you still have Venezuela, South Americans, Canada has a nice portion, probably 5%. And then just scattered UAE probably being like the most like growth climbing area or region. And then Paraguay, comes up a lot. And then, scattered around like Iceland, Norway, Iceland was a hub for a while, but they put a moratorium against it. So you have to be careful of policy when you like deploy miners, because that'll bankrupt you.
Yeah, I mean, when we're building out our portfolio, it's one of the things we look very closely at. What is our geographic mix of the public miners that we're owning? And it's a hard thing to manage on a lot of levels because there are different regions that are, here in the U.S. that are more friendly. I mean, like Texas is very friendly, to
Yeah.
Bitcoin mining. You don't want to be too concentrated in any one location if you're trying to build a diversified portfolio. I know my friends at Riot too. They're great at moving ahead of the curve, right, with their energy exposure as well. It's a very challenging model. So if you can be diversified, I think it's a good thing. So a little bit maybe off subject as our focus is, talk to us a little bit about, how blockchain Web 3.0 or Web 5.0 might affect your business.
Yeah, I mean, I think for like Bitcoin miners, like that's like one dimensional and it's tied and focused on Bitcoin and energy, but you do see like Bitcoin miners because like energy is a very valuable asset and they're building out data centers. You do see some companies like Hut 8 and like Applied Blockchain that are transitioning into providing compute for like AI. So I think like we could go on a rabbit hole on this, but like a whole tangential is like the parabolic demand for just generalized compute power. And I think like typical data centers, tier 1 through 5, like very expensive build outs, like miners do a really good job of building out infrastructure for far cheaper costs. And they can leverage that to, do really well in providing like AI type of, computational power or rendering or machine learning.
Yeah, I mean, if you know how to manage a data center, you can get paid in Bitcoin or paid in dollars, right? I mean, there's definitely a commonality of the business model, So I get why the miners, or at least some of them are, let's say, diversifying how their business model is working, and it's quite exciting. When I look at a lot of the miners, I see very different business models across different management teams. So it's always fascinating to me. Yeah. So for those who are listening, well, how do they get the research that you're mentioning, by the way?
No, would love to have subscribers. So you just go to blockwareintelligence.com and you just sign up to our weekly newsletter. It goes out every Friday. We cover Bitcoin macro, equities that are exposed to cryptocurrency, like Coinbase, for example. And then, of course, Bitcoin mining. We put out really, thorough and intelligence reports. And then as well through there, we write, probably research reports once or twice a month that are pushed out through that channel. So that's for the research arm. And then for our generalized services, you go to blockwaresolutions.com. You can see all of our historical research, media mentions. And then if you're interested in services, the marketplace link is right there. If you're interested in the revolutionary, live hacking idea, but, you can contact us for, a number of different ranges through the website.
And it is good stuff because I've been a subscriber for a while and shared, I think, the research in one of my monthly reports. It's funny because when you start talking about research about established industries, it's so much easier. But when you're talking about an industry that is evolving almost every day, right? Staying on top of all the changes is just so challenging and so important,
Oh yeah, it's a full-time job. Like every day, my wife kills me, but I'm reading because like there's news that comes out that you need to be on point. So we have a full dedicated research team and we try to cover that's weekly because weekly things change, like SEC lawsuits and then resolutions and then, X announcement and B announcement and ETF and BlackRock and that's just in the
Yeah.
last week, right? It's fascinating.
Yeah. No, and you also have podcasts too, right?
Yeah. So yeah, if you just go to Blockware Solutions or Blockware Intelligence on YouTube, you can subscribe to our podcast. We do weekly interviews. Dan, I know you're booked to come on, so that'll be a great session. But we've interviews the likes of Michael Saylor, some most of the CEOs of the public miners, a lot of the people that are building services around Bitcoin. We're a Bitcoin focused company, so that's who we like to bring generally on the network or the podcast.
And I think when I'm doing my research, I think it's so important to build out your tentacles around research, right? Build out your network and who you can really talk to find out things, because at the end of the day, the research side is still evolving and it's still very nascent. So I think that you guys are unique in some of your information flow, so it's pretty cool. Don't bother doing research on the ETF side. We got that covered.
Yeah, I'll leave that to you, but
happy to help you anytime on that. But
yeah,
the where do you stand? I'm curious because I think historically there's always been a debate which leads, price of Bitcoin or the mining equipment price.
usually, I mean, hash rate is a laggard to Bitcoin, just like gold mining. And then usually Bitcoin machine price is a laggard to Bitcoin price. So
Okay.
both are laggards.
So what might it mean if Bitcoin equipment prices start going higher? Does that indicate that price might be plateauing on Bitcoin, or it's just finally hitting?
It's speculative. It could mean that people think that Bitcoin price is going up. The market could be catching up. Like I said, I think machine prices bottomed 2 weeks ago, and we're underselling the market. Those markets usually correct. There's just not too much data around it, and like my platform, in the future will have that data, which is awesome. So.
And I think something that a lot of folks don't understand is the price of the equipment is often a function, or at least it should be, is return on invested capital, right? Or return
Exactly.
on investment.
Yeah.
Is it usually 12 months, 15 months, 18 months? What's the range?
So it just depends how you view the machine, right? Like if your machine holds value on day 2 after you mined for 2 days and made profit, you could have already ROI'd. If you sell your machine off, you made a profit. But usually like a really good time to enter is at the beginning of like right after the halving, because the machines usually, run for 4 years. So ROI typically sits like in the year and a half range.
Yeah.
And but a lot of it depends on your strategy. If you're selling off Bitcoin you mine, then it could be longer if Bitcoin, appreciated in price, right? Because the Bitcoin you mine now at 30K, Bitcoin 60K, if you held it, is 60K. And then you may be able to take a higher exit on your machine. So like it's all about your strategy within mining. If you're hodling, if you're selling off, or accumulating, and then also properly exiting on your machines as well.
Yeah. I don't know if you can comment on this, but and if you can't, that's totally cool. But I find it a bit of a challenge getting different answers from different publicly traded miners as to how they're depreciating their equipment, whether it's a 2-year, 3-year, or 4-year period of time.
Yeah. Some do accelerated, some do multi-year. It just depends. I don't want to give advice here because I don't have a CPA, but it just depends on like the CPA firm that does it.
Sure.
A lot of our clients are companies, and they use like accelerated depreciation against their capital gains or profits, so they can write off.
Yeah, but you confirmed something that one of the miners told me. Listen, I can run these for 4 or 5 years. I can run them for longer than that. And that's part of the challenge in my mind on trying to figure out the right calculation. So putting the mining business aside for a second and putting financial services aside and having a little fun with crypto in general, right? Where do you see which industry will be the most impacted by crypto or digital assets or tokenization? Yeah, I'm just totally having fun with you on this. I always ask this question.
Yeah. So I think like stable coins are, becoming really prevalent and have a good backing as a payment mechanism and form. Like so Tether's done really well. And then Bitcoin with Lightning as a payment layer, like globally, you could pay somebody from the United States to Africa. So I think like those two are very interesting. And then the technology of blockchain itself with smart contracts and being permissionless, but like having a smart contract around a transaction, I think are three very bullish, use cases.
Well, which industries? Like,
Oh,
that's my
banking.
question.
Yeah, I mean, I think banking. I think the internet, evolution of the internet, advertising, marketing, real estate. I think everything could be impacted, which is quite fascinating.
Yeah.
Especially energy. I didn't mention energy. That's number one, right? Bitcoin mining fixes grids.
It does. No, I think that's probably something that is totally underappreciated, right? And
Yeah.
That it makes everything better, right? When it comes to energy, the ability to switch on and switch off. So Mason, we're at the top of the hour. I thank you for your time. Definitely one last point, you mentioned where people can find out more information about your company as well as the research. And by the way, I think it's all free, right?
All of our content's free, and it always has been. So I mean,
Yeah.
Sign up. We're putting out some of the best information out there. BlockwareSolutions.com. They'll take you to everywhere that you need, and then would love to onboard clients and services and work together with your audience. But at the least, subscribe to our newsletter and podcast.
Excellent. Mason, thank you very much. I hope you have a great weekend and look forward to reading more of your research. And your podcast.
Always. Yeah. Thanks, Dan.
Okay. See you later.
Bye.